Hello, my name is Manny Kagan. I'm a mortgage master, founder of Money Solutions Academy, and I have a special guest today. Her name is Robin Kozelka, and she works for Mega Capital Funding Inc.
Yep.
Sounds very important, right?
Yep.
Now, uh, here I want to stop for just not to continue our conversation, but rather to tell kind of company you're working for. I will explain.
Okay.
So basically, there are a number of different ways how money is offered to consumers. You can go to bank, any commercial bank, a regional bank, credit union, and they basically will lend you their own money or your money, investors' money, and they will charge interest rate on not, and then will become portfolio loans. Different category is mortgage banks. This is what Robin is working. So Mega Capital is a mortgage bank. Mortgage banks work primarily from money or lend money which they have from investors or lines of credit, large line of credit, but primarily it's investors who buy loans from them, and investors set up the way they underwrite files, which is called underwriting guidance. And the difference between one investor to another or from one mortgage bank to another is underwriting guidance or how they underwrite. And this makes a difference. And this is why I asked today Robin to come, because she's going to be sharing with you how real estate agents can buy real estate. Now, of course, we all like to help others. How about ourselves? So, Robin, tell us about what programs you offer.
Well, Mega Capital, we offer pretty much from soup to nuts traditional loans. Jumbo loans, USDA, VA, FHA, Fannie Freddie loans,
But
multiple Jonas.
but listen, what you just described is everyone has it. I want to be unique. What's
unique. And we also offer what some banks may not offer, and banks generally don't offer, and a lot of mortgage banks don't even offer, which is some what we call non-qualifying mortgages, which is a different ways to qualify borrowers. Generally, investors, borrowers of high net worth, and also self-employed borrowers.
And again, there are more and more lenders who offer those programs.
Yes.
So, but point is that, of course, I like to work with you because personal relationship for many years and you deliver. But now it's a question is what Mega offers which others don't. And I want specifically talk about real estate agents, how they can buy.
Absolutely. So there's a lot of things that non-QM can help real estate agents do, but one of the things that real estate agents may rely on to get themselves qualified is maybe bank statements, because a lot of self-employed borrowers have a lot of write-offs. But the problem may come up with real estate agents in particular is bank statement programs, and there are many of them, usually require a consistent number of deposits through the year. They like to see, if possible, every single month having a deposit. And we know that that's not realistic when it comes to real estate agents, especially real estate agents working in this area. So a real estate agent can be very, very successful in this area with the median house prices in the millions of dollars. They could be successful here selling 4, 5, 6 homes per year, or maybe 7 or 8 even, but maybe those cluster within certain months. So generally, non-QM lenders even that offer bank statement programs might decline a real estate agent because maybe they have over 5 months with no deposits, which is could be a very successful real estate agent still making a lot of money. So one of the programs that we offer that I believe is unique to Mega Capital is called our MVP product. The thing that I really like about the MVP product is for any self-employed borrower, but real estates may fall into this category, all we require for that product is a borrower prepared or a CPA prepared, it could be either, profit and loss statement.
I want to stop. Yeah, I want to stop you. You said borrow or CPA. Now, CPA is more challenging. What we find out, CPAs are not willing to make those things because it's too much liability.
Right.
And therefore, if we can avoid CPAs and have borrowers prepaid, that's huge difference.
Right. And so with Mega, we have programs for both. And if you can get a CPA or a licensed tax preparer to sign your P&L, you would get maybe a higher loan to value that you would put less money down, or you can possibly get a little bit better pricing. But for only a quarter add in the price, which is very reasonable, you would be able to have a borrower prepared P&L. So you would provide your P&L with only 2 months bank statements to show that those bank statements are reflecting at least 90% of the money that you would have, or that you're showing as the gross revenues from the P&L.
In other words, what you're saying, let's say there was a transaction or number of transactions within 2-3 months.
Right.
And the real estate agent in this case was paid and paid well.
Right.
So this becomes a reflection. You can create profit and loss. Profit and loss for the whole year, or
For the
just
whole year.
Okay, now you're projecting basically.
No, you're going back 12 months.
You're going back 12 months, but you're utilizing, okay, so whatever it is, let's say they have few dry months and few good months, but overall the whole year is good year.
Yes.
And by preparing profit and loss, self-prepared for 12 months, that might be a winning ticket.
Exactly. You would have to provide 2 months of statements at least.
Okay.
Now, I say at least, which is good, because let's say last month you didn't close much, and then the month before you didn't close much, but the month before that you had 3 closings. Well, you can go back 3 months or 4 months or whatever you would need to do to show that your average for those months would come up to at least 90% of what you're claiming your top revenue, top revenue for the year would be. So you would only have to go back that number of months. So if you're on average doing 10,000 or 20,000, 10,000 a month, let's say, for example, you would have to show months that would show at least $9,000 a month.
Okay, perfect. So now you have 12 months self-prepared profit and loss.
Yes.
You have 2-3 months bank statements.
Yeah.
Showing that money came in.
Yes.
So how lenders will look on this? How they'll qualify you?
So if you say, hey, if you're going to go, we're going to look at what your expenses were. And so if your expenses are only 20%, then we're going to give you 80% of your gross.
So they go by the expense factor of
the
self-repair.
P&L.
Self-repair.
Yeah.
It's huge.
Yes.
Because often the lenders ask for CPAs to write, let's say there's only 15% factor, but they cannot write it.
Yes.
And then lenders discount it to 50%. But you say it can be even
Yes.
whatever they put it on.
Exactly. Now, it has to be reasonable. You can't say I have 0 expenses. Like,
no, of course, no. But there is reasonable expenses to every every occupation has.
And it may not be as high. And another benefit of this is it's going to account for more income. So a lot of times, if you can't get a CPA to sign an expense letter on a bank statement program, you may be limited to 50% with that lender. Now, our bank statement programs and real estate agents are welcome to use our bank statement programs as well. If it's a real estate agent, you don't have any employees and you don't have any physical space that you're renting, we would probably give you a 20% flat expense factor anyway. And then so we could do it either way.
Perfect. Yeah. So let's use just an example. Let's say it's $100,000 a year. Yes. And expense factor is 20, so it leaves you 80,000.
Exactly.
So this 80,000 will constitute the income which lender is going to use to qualify.
Exactly.
Okay, very simple. So just divide it by 12. This gives you the number. So now you just have to find a home. And how much down payment you need to put on those programs?
It depends on the program. If you're doing a bank statement program, you need 20% down. Other lenders maybe go higher. We go to 20 right now just because of the climate. But we have very good pricing for that.
Yeah.
You might go if you're doing the borrower prepared P&L, you're going to need to put 20. You're going to need to put 30% down,
which makes sense because this is a risk.
And we have a MVP3 product that just recently came out, and that allows only for the CPA or licensed tax preparer signed P&L. That one we can go to 75. But yeah, so you're going to look at anywhere from 20 to 30%.
There are choices.
Yes.
Though I want to make a comment. So some of lenders like Mega, they allow higher loan to value. Now it's less down payment, but they cannot do what your bank is doing.
Yeah, exactly.
And this makes a difference. So now you are using word price. Price in our language is interest rate. and we are not supposed to talk about interest rate
I can't
because
quote
really,
specific ones. Yeah,
no, because
Yeah.
no one really knows, and it's very specific to situation what clients have, down payment, credit score, etc. But basically, there is a way to make it work, and this is why I asked Robin to be here to share this opportunity with you. My name is Manny Kagan. I promise to help you. Thank you.